Uh-oh, this is not good. Fast food prices are rising. What are Americans going to do? Americans love fast food, and prices are rising pretty fast. Hey everybody, it's JJ here. You're watching Bull Boom Bear Bust. It's Wednesday, March 3rd, 2021. Got a lot of news to get into. Let's talk about the rising fast food prices, the reasons behind it, and how much worse it could get. We're going to talk about inflation expectations outside of fast food and more. But let's start right here. Restaurantbusinessonline.com. Fast food menu prices have soared during the pandemic. Now, I've noticed this, and I try not to eat fast food too often. Sometimes, if that's all you have time to do, that's what you have to do. But let's take a look at these numbers here. Now, first of all, with the restaurant closures in some states completely closed down, in other states it was limited capacity, but fast food became the thing because drive-throughs were not restricted, right? And a lot of people just did not want to have the inconvenience of going into the restaurant and putting that thing around your face and all that stuff. And they preferred to go through the drive through. And also, with more people going on a more strict budget, more people were selecting fast food because it was cheaper. Well, maybe not for long. Let's take a look at these numbers here. In January 2021, prices for food away from home increased 3.9% year over year. And that was the highest rate for menu price inflation since late 2008. What was late 2008? Wasn't that right before the financial crisis? So are fast food prices predicting that we could be on the cusp of financial crisis 2.0 or maybe Great Depression 2.0? Well, maybe, maybe not. All right, but here's more on the numbers. 3.9% was the overall inflation or increase of food prices away from home. That includes go in and sit down restaurants or dine-in restaurants. But when you look at fast food restaurants, it's 6.2% because they have more drive-throughs. They're more convenient. And again, a lot of the restaurants were closed down. So 6.2% increase for fast food restaurants. That's a big increase, 6.2%. Right? So if you're lucky to still have a job, getting a 6.2% raise would be nice. And this website right here gives us a nice chart. And you see the full service restaurants where you can dine in saw a minimal increase, about 2.9%. But here are what represents the fast food restaurants. Huge increase. And as you can see, the increase seems to be accelerating. But even fast food restaurants are not getting out of the situation unscathed. We have 70 Jack in the Box location restaurants are closing and filing for bankruptcy. Now, Jack in the Box is based here in San Diego, and I've got to admit it's the restaurant that I go to the most when I look for fast food, which is not often. And here's another one, Ruby Tuesday, closing more than 600 locations. Now, Ruby Tuesdays, I believe, are all dine-in locations, and those were the ones hardest hit because also Steak and Shake could soon declare bankruptcy. I remember Steak and Shake back when I lived in the eastern part of the United States. I don't think we have them out here in California. So the restaurant industry continues to get pummeled, and the locations that do manage to stay open, they are going to be raising their prices. As we talked about in our last report, rising fuel prices, energy costs, and rising demand for the easy fast food is going to create more and more inflation and rising prices in the food industry. Also, with more farms shutting down, filing bankruptcy, and food shortages, expect even bigger price rises in this industry. All right, let's transition here a little bit. Let's talk about the national debt. Big scary headline, $28 trillion debt. Well, I guess it's scary. Wasn't it scary at 27 trillion and 20 trillion and 10 trillion? Even a trillion, that's a pretty big number. But here's the secret. You're not supposed to know this. The debt, that's money that was created out of thin air, it can also be deleted back into thin air just like they created it. But see, you're not supposed to know that. Right? Don't tell anybody. That's supposed to be a secret. Yes, they can delete it into thin air. Have you ever heard of bankruptcy? Well, we just talked about it with the restaurants. There's such a thing as personal bankruptcy. What happens when you file personal bankruptcy? Your debts disappear. Well, the same thing can happen here. You could just delete this debt. It could be gone at the stroke of a pen. But do you think they're going to do that? No, because they have to have a reason to tell the people, that's you and me, that we have to pay for it by giving up a bigger and bigger portion of our paycheck. You see how this works? You see how this works? They count on you being dumbed down and not having any idea of how things really work. So now every time they spend money or talk about handing out stimulus checks to help people, they can say, no, it's too much spending, it's too much debt. The taxpayers are going to be on the hook for that, which is true, but they can use that as an excuse for not spending money in the places they don't want to spend it. But in places they do want to spend it, they can just say, we have to do something. It's a crisis. We have to print money out of thin air and hand it out to, well, mostly our buddies and our friends and our business partners. But maybe every once in a while we'll hand out a check to the people just so they can kind of, calm down and not do any uprisings. You know how this works, right? Yahoo Finance. U.S. inflation expectations hit decade high as yields resurge. And look at this 10-year bond yield exploding here, up nearly 4%. Now that's a bad sign. When you have so much debt, rising yields can be dangerous. Is this a sign? Is maybe the Fed losing control? Can the Fed lose control? Not really. Anything that happens is allowed to happen. So there's no accidents, there's no mistakes. They could say it's a glitch or they could say they lost control, but in my opinion, that's only an excuse. Let's go down to a chart here, and we see U.S. inflation expectations climb to the highest level since 2008. There's that year again, 2008, the year of the great financial crisis. Could this be close to the United States approaching the end game, the end of the line, the collapse? And what kind of collapse will it be? Will it be inflationary or deflationary? Well, if the bankers ever pull back on the stimulus and the market propping and the endless liquidity programs for the banks, you will see deflation. So it's anybody's guess. A lot of people are guessing both scenarios. Myself, I try to be balanced. I don't have a crystal ball, so I'm trying to prepare for both scenarios. I hope you're doing your due diligence and research to try to figure out how to prepare for what's coming down the road. And I think a lot of people are going to be shocked at what this country is going to look like here in the very near future. And I expect more shoes to drop in the coming months. And we'll have to keep an eye on it, but please keep coming back here for updates. Thank you for being here, for watching this report, for all your support, all your comments, very, very well-researched comments. If you haven't checked out our comment section, please check down below. Some very smart people down there. I see real estate investors down there, people that made a lot of money on digital assets and other investments. So a lot of good tips and commentary down there. Also people just sharing their stories about losing jobs and what they had to do moving in with family and friends. But thanks everybody for your engagement, your support in this channel. Stay well, stay safe, stay prepared. See you next time. Bye for now. Peace.